behalf of our CEO, Mr. Frank Muti, who, due to unforeseen circumstances, was not able to join us this morning, but I hope I will do justice to the speech that he had prepared in advance. So, distinguished guests, industry leaders, innovators, regulators, ladies and gentlemen, Kenya did not just digitize payments, we digitized trust. 2 decades ago, financial inclusion meant opening a bank branch. It meant paperwork, distance, and infrastructure made of concrete and steel. Today, inclusion is powered by code. It is activated by a handset. It is scaled by APIs. Kenya became a global case study because we built one of the most dynamic digital payment ecosystems in the world. We proved that money can move instantly, securely, and at scale. But today, I want to suggest something important. Payments are not the finish line, they are the starting point. Because the next frontier of digital finance is not just frictionless payments, it is frictionless ownership. We have built highways for money to move, millions of Kenyans transacting. They send, receive, borrow, lend, and save using digital platforms. Financial access has expanded dramatically. The rails are in place. Yet, there is a structural gap. While payments are daily, investing is still perceived as distant. While wallets are widespread, ownership remains concentrated. While transactions are embedded in daily life, capital markets participation is not yet native to that same ecosystem. In other words, we built the highway. Now we must build the on-ramps to wealth creation. Because payments move money, capital markets multiply, and integration transforms economies. At the Nairobi Securities Exchange, we see this very clearly. Capital markets are not merely trading venues. They are national infrastructure for capital formation. They mobilize long-term funding, they allocate risk, they price opportunity. They create pathways for citizens to participate in the growth of their own economy. In the last year alone, Kenya's market capitalization has expanded significantly. And this has grown by almost 100% from 1.7 trillion Kenya shillings to about 3.4 trillion Kenya shillings today. In 2024, in the past year alone, Kenya's market capitalization has expanded significantly, reflecting renewed investor confidence and strengthened corporate performance. Liquidity has improved, participation is rising, and this transformation is taking place against a backdrop of strong market performance. In 2024, the Nairobi Securities Exchange was the best performing exchange in Africa. In 2025, we ranked second on the continent in dollar terms. That performance was not accidental. It reflected renewed investor confidence, improved liquidity, stronger corporate earnings, and deliberate market reforms. It signals that Kenya's capital markets are not only innovating, but delivering results. But we must ask ourselves a strategic question. How do we connect millions of digitally active Kenyans to this growth engine? The answer lies in integration, from payment rails to investment rails. Let us think about the financial stack. First, digital identity. Second, wallets. Third, payments. Fourth, data. And finally, capital markets access. For too long, that final layer has operated separately. Yet when investment capability is embedded inside digital payment ecosystems, wealth creation becomes native to daily life. Every wallet can become a portfolio. Every transaction can become a pathway to wealth. That is not a slogan. It is an architectural shift. It means seamless onboarding. It means mobile-first investing. It means partnerships between exchanges, fintechs, banks, and telecom operators. It means regulatory coordination that supports innovation without compromising stability. When these elements converge, investing stops being an event and becomes a habit. And this is not theoretical. This shift from payment rails to investment rails is already happening. With the launch of ZB Trader, co-developed with Safaricom and Kestrel Capital, we embedded capital markets access directly into the mobile ecosystem used daily by millions of Kenyans. For the first time, investing in listed securities can sit alongside everyday financial activity on a device already in citizens' hands. That is not incremental innovation. That is structural integration. It collapses distance, reduces friction, and makes participation in capital markets as intuitive as sending money. We are already seeing the power of collaboration between capital markets infrastructure and digital financial platforms. We are witnessing how technology can lower entry barriers, simplify participation, and broaden investor access. And this is not only about equities, it is about enabling retail participation in bonds. It is about unlocking access to infrastructure financing. It is about democratizing participation in national growth. When ownership becomes accessible, economies become more resilient. Citizens are no longer just consumers of economic activity. They become stakeholders in it. To the fintech leaders in this room, your next frontier is not just transaction volume, it is asset ownership. Your user base is not only a payments community, it is a potential investor community. So to the banks, deposits can become gateways to diversified investment journeys. Data can power intelligent, responsible pathways to wealth accumulation. To regulators, interoperability, regulatory coordination, and clear innovation frameworks are what transform isolated systems into an inclusive financial architecture. The future financial institution will not separate payments from investments. It will orchestrate both seamlessly, and in doing so, it will redefine inclusion. Imagine a country where every digital wallet is also an investment account, where saving, investing, and ownership are not elite activities, but default behaviors, where young entrepreneurs across Kenya do not merely transact digitally, but build wealth digitally. We already digitize money movement. Now we must digitize wealth creation, because the future of digital finance is not just frictionless payments, it is frictionless ownership. And when ownership expands, opportunity expands. When opportunity expands, resilience expands. And when resilience expands, nations transform. At the Nairobi Securities Exchange, we are committed to ensuring that capital markets are not on the periphery of Kenya's digital transformation, but at its core. We see ourselves not just as a marketplace, but as a programmable infrastructure layer of the digital economy. The next chapter of financial innovation in Kenya will not be written by payments alone. It will be written by ownership. And together, by bridging digital payments and capital markets, we can unlock broader investment pathways, deepen inclusion, and build a more prosperous, more participatory economy. Thank you.